Hello everyone and welcome to Day Trader S&P 500. Today is July 19th, 2021. It's a Monday. It's an exciting Monday. A lot going on. We just did a report yesterday, but we need to do one today because there's so many important things going on with the stock market, in particular the S&P. Let's take care of some business first. You can see our disclaimer there and our Timer Digest awards. Right there, you can also see our subscription services there. We started a new video on demand, YouTube discount 10%, and we have a contest. Guess the closing price of the S&P by the end of July, and you win a free month subscription to everything we have to offer. I also want to thank you guys for patronizing the channel. Remember to hit the subscribe button, the reminder bell, and the like button. We appreciate all of you watching the channel. Some important things to get to today. I want to close that. There we go. Let's see here. Let's get back to the action here. In the S&P, okay, this is a 10-minute chart. This is the July 6th high, which missed by 1 day or 1 tick of our turn date, and we'll get into those in a minute. And then from there, we were able to identify an expanded flat where we have an A down, a higher B up, and a C down. What we're looking for from there was 5 waves up. We got them, and now we have a decline from there. It's interesting, the Fibonacci retracements and multiples in this. I want to show you guys really quick here. This second wave here, retrace an exact 618 of that advance. Okay, let's move that out. This second wave of another degree, let me get that in here, retraced a 382 of that decline. I'm sorry, we got 5 waves are now to the downside. Okay, and then let's look at this. Well, let's go look at the picture here because there's so much going on, and I'm so excited. I think I'm losing track of everything. Here is the opening high, which came right after our Fibonacci turn date, and it allowed us to identify that expanded flat. And I want to get back in here really quick. I want to show you guys here, right after that, the Monday after that, our morning alert, we said expanded flat be followed by 5 waves up. Excuse me. And later on in there, we said again in our report to our customers, from that wave C low, we can expect a 5-wave advance. So the Fibonacci turn sequence alerted us to this high, which enabled us to identify the expanded flat correction, which enabled us to look for 5 waves up, which enabled us to identify the high and then anticipate the huge decline, which is unfolding before our very eyes, okay? And you can see that second wave is a 618 retracement of that first wave. And we put out 4 reports since Sunday. We had a report Sunday night, and then a pre-market open morning alert, and then a midday report, and then another post-market report today because there's so much vital information. We were looking for these targets, and the market's hitting our targets within 2 or 3 points of perfection. So for our monthly subscribers, instead of 1 report a day, they got 4 from Sunday night in less than 24 hours into Monday's close. Anyway, you can see this wave 3 here gained a 3.618 multiple with the first wave over here. And this 3 here gained a 2.618 multiple of that first wave there. Here's our 4th wave up targets. If this 3 here is complete at this low, and it looks like it is, but we have our make or breaks. There's our targets for wave 4 up. Make or break is the wave 1 high here. 4 can't go higher than the wave 1 low. I'm sorry, that's just above the 43.40. Otherwise, anything below this low, and we're going down even further. And we'll deal with that as that happens. But it looks like we had the all-time high here on the 14th. We had 5 days to this low. It would be convenient and in Fibonacci perfection if wave 4 spent 3 days up, which would make a total of 8 days, and then we'd have 5 days down into the 727 low, which is another return date, and I'll get to that in a second here. But I want to show you guys that on these extensions here. Here is this one. There is that too, and you can see how that ended up a 2.618. That is a beautiful thing. And then we have our 5 waves within the third wave. So we have a 1 down, a 2 up, a 3 down here, a 4 up, and a 5. There we go. And you can see within this 5 wave decline, let me get the extension on here. You can see that there is 1 there. It's pretty close. There is 2, and you can see it's kind of overlapped, but that is, you can see the 1.618 here, the 2.618. So 3 of 3 gained a 3.618 multiple. Why is that important? It's important for several reasons, but it definitely signifies a change in trend, because if this was a simple 3-wave decline, 5 down, 3 up, 5 down, this would be an A and a B and a C. C gains equality with A most of the time, and that's where the market left us on Friday's close. Okay, so you can think it's an A, B, C, and then all of a sudden, like they like to do, if you think it is and it's going up, and that's where C equals A, and we're off to the races to new highs, they pull the rug out from under you and gap it down and close out all your stop orders and everything else, and then nobody makes money. Okay, but Fibonacci and Elliott Wave helped us here, and here we are with 3. Now we're looking for wave 4 up. Okay, so that's what we're looking at in the S&P. I want to show you another schematic I have here. I think we had, this here. We also wanted to look at the expanded flat. That's pretty much the same thing. This is what we put out. One of the 4 reports this morning, we were looking for these targets, and they hit them. Okay, I want to show you guys something else too, what we put in our report. I want to get to the daily chart of the S&P. You can see here, this is a daily bar. We've got 1, 2, 3, 4, 5 days in a row down. Okay. By the way, I'll get into this with another report, but I've been looking for 5 ways up from the March low. You could also count it from the January 29th low, which was right when they were doing literally illegal things to keep the market from crashing back here with the GameStop and not allowing people to buy it, but you could sell it and all that stuff. So that could be counted, but I've got it here. That's, you can see the Fibonacci retracement levels here at 4128, 4045, and 3962. Excuse me. If this is 1, 2, 3, 4, 5 from here, okay, both of these work because it depends on where the third wave expanded to, but you can see it's not a whole lot of difference there. You know, we got 1, 2, 3, 4, 5 here, so I could argue that either way, but that's what we're looking at. But I want to make a point here. Here's 5 days in a row of down, okay, and we're looking at a daily chart. I am not finding 5 days in a row down unless we go all the way back to, see, and here's 1, 2, 3, here's 2, here's 3. There's a lot of 2s and 3s, but we have to go all the way back to here. Remember this, February of 2020, February 19 to be exact. There's 1, 2, 3, 4, 5, 6. Okay, and that was the beginning of that huge sell-off into the March 2020 low, which I believe this has to correct. But we'll just measure that and see what this brought us back then from that high to that low. And I remember that very well. It was a 35% correction in less than a month, or about a month, from February 19th to March, was it March 20, March 23? I think it was March 23, yeah. So that's the last time we had 5 days in a row down. We actually had 6 and then a correction up. But realistically, the market should correct all of this from that March 20th or March 2020 low at a minimum. Okay, so let's just get that out while we're here, because that's what we're looking at. This appears to be 5 completed waves from this low. We'll see. We have our make or break points, by the way. I don't know if I gave those to our customers in our monthly subscription, but here's what we're looking at from the March low, and that'd be a nice right in there. 382 is 35.60, 50% is 33.02, and that's right in what you could call a fourth wave. Depends on how we label that, but that's where all the congestion is. So that's what we could look at in the longer term. Back to the short term, a break below this low, which was 30. What was that? 30. I'm sorry, 42.33 means we're going farther down. Here's our wave 4. Let's get those wave 4s up. Let's move these out of the way. Okay, and let's. That looks so nice. Let's just leave it there. That's a nice third wave with an internal 5 waves to the downside on top of it. And there's those targets there. You can see that is right around the 42.88, 43.04, and 43.21. Exciting times. Wouldn't be surprised if it goes up. They'll try to close that gap, any one of these three. But if this has indeed changed direction and trend, the upward corrections typically fall short, as we saw back on the daily bar going back to the February 2020 high and the March 2020 low. And here's our, I didn't get to those, here we go. Sorry about that. The time spiral, most important. Okay, we're running a time spiral from the March 4th low, and we're running another time spiral, it's in red, from the May 7th low. These spirals have, you can see the slippage here, none, 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 plus a minute, none. The next date in this time spiral is July 26th. It could mark a possible wave 5 low, as you saw from our previous chart there. We have a 1, 2, 3, and 4. Okay, and then the one from the May 7th high is in red, and this identifying all these turning points. That one doesn't have another turning point date until August the 4th. But the one that's looming right in front of us is 726. And if we can look at this here going back to that chart there, let me just do it on this one here. Okay, so there's 714 high. These all tie together. The March 4th ties in with the May 7th, and now we got a new one from July 14th. We have 5 days down. We're a little bit ahead of ourselves. If we get 3 days up, it'll give us 8 total days into 722, and then we'll have a nice potential 727 on this chart and the other chart, and from March 4. And for what it's worth, the NASDAQ has a turn date of 726 in its Fibonacci time spiral. Exciting times. We'll see what happens. Wouldn't be surprised to see it roll up here for another day or 2 or 3 at the most. And then let's look down for that wave 5 low. That could be exciting times. Okay, we'll touch base again soon, and I promise I'll get to those other markets. Until next time, take care, everyone.